What's going on today, YouTube? Today, I want to talk to you about how to invest like Warren Buffett and what some of his quotes mean. I'm going to break them down a little bit. If you like this kind of videos, leave a like on the video below, subscribe to my channel, and comment below if you have any questions. On my channel, I talk about stock market investing, investing in general, everything about investing. Mainly just cover what I do, what I think, what my views are. You can agree with them, you can not agree with them. It's up to you. It's all up to you. You can follow me, see what I do, and if you think it's wrong, do everything opposite of me. If you think it's right, then I don't know, do what I do. And if you think it's wrong, do stuff that way you want to. No one's holding you back. I'm not telling you to do anything, just showing you my points of view. So anyways, I'm going to use some of his quotes and I'm going to break them down through Facebook because I think this was a great example that covers a lot of his quotes. So we're not going to go over all of them, but we're going to go to a couple of highlights. And I have Facebook over here in the other tab. We're going to go over the chart. We're going to go over the chart with his quotes. So, buy wonderful companies. One of his greatest rules is to buy companies that you know of, you know what they do, you understand them, and you think, okay, the company's value is great. They're going to keep on advancing in the future. They're going to keep on getting their stock price higher. They're going to keep on advancing their company. He doesn't buy companies that he doesn't think's good. So Facebook, everyone knows what Facebook is. Facebook, any age, you share your pictures, you share your thoughts, you share your stories, whatever you want to do, it's on Facebook. So over the years, Facebook has really gone up in value from 2013 to today, to late 2018. But if you notice, it had a big drop right in here and a big drop right in here. And then it was all over a scandal that Facebook was selling people's data and just going against your privacy policy, and people didn't know they were signing up to allow them to do what they were doing. So stock dropped a lot when this news came out, shot up again, and then I believe earnings came out and made the stock drop even more. So stock dropped a lot, and then all of a sudden people decided they really didn't care that it was using data because everyone has a great experience on Facebook. And people didn't really care about this news too much because they always have a great experience on Facebook. So they're like, it's alright, I guess they use it, but what they're trying to do, they help me out. And if you don't know, Facebook, they use the information stuff, they use your posts to get ads relevant to what they think you would enjoy seeing when their ads pop up. So it's not just a random ad that comes up and you're like, I have nothing to do with this, why is this showing up? And guys, every company does this out there. Your stuff in your mail, it's all to what people think you will buy. You may think the flyers are the same for you and whoever down the street, but they're all different. They're all targeted. It's all a targeting. All these companies out there. But anyways, that's on for a whole different note. So if you notice, stock fell drastically here and fell drastically here. Now, Buffett says, I only buy good companies that you think are going to keep on advancing in the future, and okay. You go farther down, invest for the long term. The market would shut down, you lost all your money invested in that company, and you wouldn't get it until 10 years later. And you still going to keep it in there because you think it's a great company. He doesn't buy anything that he's not going to hold for at least 10 years. So I want to go back to this chart. Okay, say all of a sudden you're like, okay, I'm going to buy Facebook because I think it's a good company and I think it's going to go up, keep on going up. Say you got unlucky. You bought it around here, around 186. So you bought it around 186, you're happy, it stays pretty consistent, stays 190-ish. And then all of a sudden, guess what? Oh no, it fell down. It lost about a little over 15% from where you bought to where it went. And people panic and they're like, oh my God, I lost so much money, I need to get out. So then they get out. And this is what I'm getting at. Buffett says, no matter what the price does, he says, buy it, don't even look at it. People don't go and look at their home prices. They fluctuate every day too. You don't rush to sell your house. As soon as the market starts to go down or the market starts to go up, you're holding it for the long term. So this is the same principle. And say, okay, you were down here, you sold, you're like, oh, phew, oh, whew, got out of that. That could have been bad. So then you watch it, you keep on watching it day after day after day, and you're like, wow, it's all the way back up to where I bought it the first time. If I would have stayed in, I wouldn't have lost any money. So say you buy it again around the $200 mark. You buy it again, it goes up to 210, you're all happy, you're like, wow, I made a great decision. This stock's going to keep on going up forever. The next day, crash. Goes the whole way down to 160. This one was like a 23% drop, somewhere in there. And now it's just kind of hovering down here. You're like, oh my god, I did the same thing I did last time. I'm going to sell. Investing is just not for me. So you sell down here. And I'm just using Facebook as this example, just because it showed up in the news and went through a bunch of, like, a couple scandals that people didn't like very much. But this is why Buffett says don't even think about buying a stock unless you're holding it for at least 10 years, because this happens to every stock out there. Every company up there will go up, go down, go up, go down. If you get in and out at all the wrong times, you buy up here and sell down here, buy up here and sell down here, you're always going to lose money. If you just stay in, you were one of the lucky ones that bought it the whole way down when it was like $27 a share. I'm sure you're not selling anytime soon if you think it's going to keep on going up, or if you're happy with like about the 10x you made, you might decide to sell. But hold it for the long term. That's where you see your gains. You don't see your gains in just little chunks of time. Don't panic. If you think it's a good company, stay in it for the long run. So that was what he means by invest for the long term. Same thing, buy it thinking you will hold it forever. Same exact thing. If you're buying a good company over time, the price will go up. Unless there's a huge lawsuit or the company just goes bankrupt, or like the CEO seen doing drugs at some nightclub, then yeah. I don't know, that company, but hey, I guess you didn't buy a good company in the first place. But we don't need to talk about that stuff. So we're going to get down to another one. Which would be what we were talking about. Invest only in companies you know and trust. Should act as a lifetime decision card with just 20 punches on it. Which means you're not going to punch in and out all the time. You're going to stay in. You're going to stay in it. So don't buy that company if the CEO is a little sketchy. And yes, sometimes you never know. It could look like the greatest CEO in the world, and then all of a sudden he does something dumb and drives down the stock price. But if you still believe in him, and you still think he is a pretty good person, then the stock may recover over time. It probably will, if he's actually into his company and not just going out and spending all the money that he's making on whatever. Number 23. It's kind of weird. This is one that I feel like contradicts itself. But I guess in a way it doesn't. He's saying great investors don't diversify. They buy one company, they stick to it. So I guess when he usually says invest in index funds and invest in index fund, he's trying to say not everyone out there is made to be a great investor. Not everyone out there knows how to value a company. So a great investor knows how to value a company, he knows what to look for, he knows what to expect. Where if you're an average investor, it's easier to buy an index. It's a broad diversification. You own a lot of different companies in the stock market. And the last one, make long-term investments over short-term ones. Like I was talking about earlier, if you're in and out all the time, you could be losing money. If you bought down here and sold, yeah, that's good. You held it for, 2012 to 2018, that's 6 years. This company probably still has a lot of room to run. Unless another social media app comes out that can replace Facebook, it's probably going to take a long time. It's probably going to be a slow transition. It's not just going to be like, boom, one day everyone on Facebook jumps onto this new platform. It's going to take years. You'll probably see this coming even before it comes. You'll see Facebook users start to decline and they'll go on to a new social media app. But until that happens, Facebook's Facebook. Everyone has it. So that's it for the video. Just want to go over some of these Buffett quotes, what he's trying to talk about when he says, like, buy to buy forever, don't just be in and out, because of exactly what I talked about earlier. You could be the unlucky one that bought here and sold here, and then bought here again and sold here. You lost a huge portion. Together, that's about, like I said, 15% drop and a little under 25% drop. So that's, you lost 40% of your money right there, not even including, like, trading costs and whatnot. So if you're going to buy single stocks, you better be sure you want to stick to them for the long term. You don't just want to be in and out on every little scandal or whatnot that happens. And just so you know, like, buying an individual stock is very risky. It's one of the most risky things you can do because you don't know what's going to happen in that company. If you're a great investor, you know what you're looking for, then yeah, you could get lucky. You could buy a great stock and it could go up and you could 10x your money. Or if it's something you really don't want to pay attention to all the time, then you're probably better off just investing in an index fund. I mean, you have a broad diversification, and it's technically, as in the past, I mean, not all past represents the future, but it will slowly go up over time. You'll get dividends, you'll start gaining technically interest, and that interest will start compounding, and you just keep on going and going and going. It goes up faster and faster and faster. And the last thing I'm going to say, like, if Facebook was a stock that Buffett was heavily invested in, most likely for him, he would be loving these scandals that come out. He would love this drop right here because he would load up. He knows the stock's going to keep on going higher in the future, so that he's looking for these chances where this stock technically goes on sale. He's looking for this big drop. He'll load up down here, then it'll go up again. He'll be happy, and then he's not going to sell. Guess what? He's going to stay in. It's going to fall down to here again, and he's going to buy more. As long as he is confident enough that this stock it will increase value over time, every chance he gets to buy this stock below a value it was once at, he's going to do it every time. So that's it. If you liked the video, leave a like below. Comment if you got any questions. And subscribe to my channel if you like this content and you want to follow my journey. And I will see you in the next video.